Hey traders, Akil Stokes here, and today I want to share with you a very special video diving into something that really allowed me to take my trading to the next level, and that's the ability to properly read a price chart. Now, I know I've done videos here on YouTube in the past teaching the basics, and I'll link those in the description below somewhere so you can check them out. But today I want to do, I guess, a second part or a follow-up on that, specifically talking about how to determine the strength or weakness of a trend, and of course how you can practically apply and use that information to help make you a better trader. Now before we hop in, I'd greatly appreciate it if you took a second or so to hit that like button, and also if you ever have any questions about anything I discuss in this video or really any other future topics that you want me to create content for, leave it in the comment section below. Special announcement at the very end as well, but we'll save that for the very end. Sorry, Keel, what's the difference between the slope of a trend versus the strength? The slope, so what our trader was talking about with the slope of the trend is like just the slope of how price action is moving. So like a steeper slope, the stronger to move. So if we have two scenarios, scenario A and scenario B, they start at the same price, they end at the same price. Which of these is a stronger move? Now again, does it matter what does a stronger or weaker move mean anything for your trading? That's another question that you'll have to answer. Does it? Like, it doesn't for me. I don't really care. So you don't want to overthink this too much. But A is going to be the stronger move as far as like the slope. So the slope is time based. How long does it take for price to get to a certain level? If it a move that takes price 1 hour to move 100 pips to the upside is stronger than a move that takes price 1 day to move to the upside. Now, strength of trend has to do with depth of retracement and length of extension, right? So there's two parts there, if you guys remember, where we measure strength of trend. Again, how much does this relate to your actual trading? Probably a little bit more than the slope question. But is it necessary to know? Not really. It can be helpful, sure, but right. But let's look at this. So let's look at trend A, and I'm going to draw up fibs just so you guys can kind of get something to measure it off of. Trend A is moving. We'll start with retracements, right? Trend A is moving like this. Trend B is moving like this, right? So again, same, as best as I could, same starting and finishing point. Which of these is the stronger trend, just based off retracements? B, right? B has a shallower retracement in general. The more shallow, the shallower the retracement, the stronger the trend. Again, if this is a bullish trend, the retracement is the relief, where price came to, where the bears pushed it back to, where the bulls became interested in. The bears were able to push it further back in this scenario than that scenario, right? So this is the stronger move because the bulls, quote unquote, fought them off at a higher point. So that's one way to measure strength of trend. A second way is look for length of extension, right? If we have a trend that looks like this versus a trend that looks like this, let's just take a look at extensions now. And you can use extension tools if you want. But now in this scenario, which is the stronger trend? A or B? A, because the extension is bigger, right? So a strong trend should have extensions that are bigger, but also extensions that are larger in comparison to whatever else you're comparing them to, which is usually nothing. But the extensions should be bigger than the previous extension. So, right, so if this second extension is larger than this first extension, that is a sign of a healthy, strong trend. In this scenario where the second extension is shorter than the first extension, that is a sign of a weakening trend. So we can put this all together real quick in many different ways. Do I want to go Elliott Wave or Head and Shoulders? Elliott Wave or Head and Shoulders? Ooh, Akil, which do I want to do? let's do... Now a quick pause just to break things up a bit. A common question I get asked is, Akil, what should I look for in a trading computer? And seeing how I know nothing about technology, the best I can do is forward you some great information. If you click the link below in the description box or check out the little QR code right here, it is a link that will get you a free trading computer builder or buyer's guide. So whether you're looking to build your own or have one built for you, it gives you some information on what you should be looking for. I've used Easy Trading Computers twice for my first system a very long time ago, and then again about a year ago when I upgraded. And well, hats off to them both times. I wouldn't be promoting them if I didn't personally use them and if I didn't personally recommend them. So for all you guys answering that questions, code, link, all your answers are right there. It's free. Now let's hop back into the video. How about we do both, right? So we'll do head and shoulders first. So we know that head and shoulders looks like this, right? So we're coming off of a move that looks like this. This would be considered a what type of trend? Yeah, you wanted answers? Now I'm giving you pop quizzes. Pop, 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 pop. Strong or weak? Strong or weak? Strong or weak? Come on, type it in. Type it in. Strong. Yep. And a keel trend would also be an acceptable answer because I am synonymous with strong. So we have that. And then we have this, right? So still a shallow pullback. We would still say a strong trend, right? But then our next move is this. Now, what did I tell you to measure as far as right? As far as extensions. Extensions in a strong trend should be getting what? Longer or shorter? They should be getting longer. Extension I just drew in, is that getting longer or shorter? The one that I just drew in is getting shorter, right? So that is a kind of a sign, right? Like a This is why I say it's I don't want to say knowing this stuff is super important, but it could be useful. Because I like to simplify it because at this point still none of this really matters. But we can get into different ways later. All right, so we have that. This is first sign of, do I have a face? Yeah, I have a face. First sign of So I want to do more faces. I like emojis. Ah, yes, look at that. So we have a short retracement, flex. We have a long extension, flex. Still a short retracement, flex, right? Long, strong trend, a keel trend. I should put my face up here. Then we have a right? So then in a head and shoulders pattern, this is followed up with typically a move that comes back down to the previous retracement, right? Would this classify as a short or a long retracement? Again, I can bring our Fibonacci in for reference based off what we did earlier. This is going to be a deep retracement. Sorry for phrasing. I should have said a shallow or a deep retracement. This is going to be a deep retracement. A deep retracement is a sign of a strong trend or a weak trend. I don't know if I have an emoji for weak. What would be weak? Anything? Any idea? This looks like a weak little arm taking a selfie. There you go. This is we'll just make it a again, right? So another sign, right? So this is a Not only do we have one sign of a slowing trend, but now we have another sign of a slowing trend. Then, right, in a trend, we would expect what to happen next? In a healthy trend, what should happen next? After price bounces off this level, find structure, hold structure, we would expect what to happen next? Another extension, right? A continuation, right? Break in violation of the highs. But we go here. We refuse to break the highs. And then eventually we do this and we break the lows here, and we know by the rules that we teach here at Tier 1 Trading, right? Violation of the previous outside return is a violation of trend. But do you see how the head and shoulders presents pretty much the warning signs for a reversal in trend? This is a classic reversal pattern. Does that make sense? We see it as a head and shoulders, and we're like, oh yeah, look at that, head and shoulders, break the neckline. And yes, the break of the neckline or the violation of the previous outside return, like that's what ultimately matters. That's why whenever we do stuff, I'm like, yeah, look, we have this, we have that, we have that, we have that. That's cool. There's nothing wrong with knowing it. But at the end of the day, nothing matters until we violate this line. So if you're new, and I know Amon's always like, I haven't gotten to that part of the training yet. No, you're giving me more homework. If you had to take one takeaway from this, and this is what we talk about, and I think Foundation 2, right? Just find the point that matters, the decision point, and that's the violation of this level. Because all this head and shoulders stuff is nice. All this, trend is nice, but ultimately it doesn't matter until we violate. So if you had to pick one thing, wait for that violation. So that's an example in head and shoulders. Another one is Elliott Waves, right? So this goes back to Dow theory, Wyckoff theory, but price action comes out of consolidation, right? It's doing the dance of consolidation, accumulation, all that fun stuff, right? And then we break out, right? So we break out. We don't technically have a trend yet per our rules at Tier 1 trading, but we know that we've started moving up. We've broken out of consolidation. We then get a pullback, and then we get this long extension, right? So what do we know at this long extension based on our rules for trends, right? Not only do we have a new structure high, which confirms our trend, but we have what? Strong or weak? Strong, right? Because this move is greater than that move. We then have a pullback. And then we'll have something like this. And again, Elliott Wave, what you're doing is you're numbering these moves, right? So this is going to be, and I'm not an Elliott Wave person, but I did take time to learn the moves. Interesting study. Great teacher, but horrible presenter, if that makes sense. She was one of the most knowledgeable people I've ever learned from, but her presentations were so dry and boring that I would also often fall asleep in the middle of the presentations on Elliott Waves and then have to retake them because I didn't acquire any knowledge. So it was tough. She was great, but it was rough. But Elliott Wave theory is like this. You have these different waves, right? So we get to this fifth wave, right? And what do you notice about this fifth wave? This is our right? Why is it our right? Because it's shorter, right? And then what typically happens in Elliott Wave theory, you're expecting some type of complex pullback. This is going to be, it could be a distribution phase, could be an accumulation phase. The market either kind of reverses or it does this like complex pullback and then starts anew, right? But the point is, at this point, the trend kind of slows down. It has a think, and then the market decides what it wants to do next. This is why we talk about the third wave being the best wave to trade. This is where the trend is at its strongest, right? This is smart money down here doing their accumulation thing, right? Doing their little dirty, secretive games of building a position. And then we get a breakout here. The pullback, which is my favorite place to trade, is right here. And then we'd like to get this extension right here. This is where other traders are getting involved. Then we get another pullback, a little bit of relief because we have some profit taking place at the top. Make that money, baby. And then we get another bit of relief. And then this is where you got to be a little bit careful. Oop, not there. This is where you got to be a little bit careful, here and here. Because this is typically the last move up. But sometimes traders expect more because they saw this move and they're like, oh, I got to get just as much. And then this is where kind of the late traders get involved, unfortunately. Where it's like the move's already done and they start hearing about it, like, oh, I got to get involved now, right? And then they get skunked out and pissed off. And then they exit their long positions and just provides liquidity for the next wave to happen if it goes up. So it's a whole thing. But anyway, that's getting too far off track. Does that make sense about strength of trend? That was an overly complicated answer. I gave Omi a two-step answer on structured trading, and then I gave a 10-minute lecture on strength of trend. But I want to end by saying this. I don't think you don't need to know this stuff. Does it provide a little bit of an edge? Yes. Like I think the more knowledge you have about the market, and this is how I like understanding it. It makes sense to me when I use emojis and stories and think about football players hitting each other and moving the line of scrimmage, right? Because that's what connects to me. So being able to understand this makes me understand the story that the market is telling me better. But I would encourage that you find your own way. Find your own way. But you don't need to know this. All you need to know is the key levels. And the biggest key level I can tell you is, again, look for decision points, whether it's a previous structure high or whether it is a outside return. Know how to identify those decision points and know what to look for at those decision points. If you can do those two things, that's going to give you a massive edge, potentially. It'll give you the first part of your massive edge, at least in understanding and making predictions. All this stuff of like, I don't use any of this stuff. I don't look at trends and be like, oh, that's the longest leg. I don't use any of that. I understand it, right? And perhaps it gives more confidence in move, which shouldn't be underlooked or overlooked, right? But I don't want you guys thinking that you need to go back through a market and be like, okay, this was this length right here, and I have to compare that to, okay, this is shorter, which means like, could it be helpful? Perhaps. Perhaps it's a weapon that you could add in your arsenal for when you need it. Break glass in case of emergency. You never know. It won't make it unhelpful. It's not a negative, but I don't want you guys, especially your newer traders, thinking that you need it, because then it's gonna get in the way of the things that really matter. Focus on the things that matter first, right? The advance is nothing more than a mastery of the basics, right? Focus on those basics, master those basics, become advanced, and then you can add your special stuff on top of that, right? Mew says, so if we call getting at 4 a late move, isn't it the point to enter the trade after confirming a 3-point move? No, not necessarily. There's nothing wrong with entering after a 3-point move, but I wouldn't say it's the point. As a trader, you can enter at any point you want. But it isn't the point. Again, my favorite place to enter is here. I mean, for a trend trader. No, yeah, it's not the point. No. That is when you would have a confirmed trend. So there's a difference between us saying we have a confirmed trend and you needing to enter after a confirmed trend, right? Those are two separate things. A confirmed trend is just us being able to look at a price chart and say, okay, we have a confirmed trend. We can now say after that 3-point move that we are in a bullish trend or we are in a bearish trend. That is a different thing from saying you should enter after the third move or you should enter after this move. You could enter after that move. There's nothing wrong with it at all, right? But you don't need to, right? Can you enter a trade here? Sure. Can you enter a trade here? Sure. Here's the thing. When we look at a trend and we look at an entry specifically, how many of you guys are counting waves and saying, okay, oh no, this is the third wave or the fifth wave, so I can't enter this? Are you basing your trade off of that? Or are you basing your trade off of your overall market analysis and where you think price is likely to go? Right, so let's look at this as another example here. Let's say I've got a move up here, right? Let's call this previous structure. And we've got consolidation down here. We break out of that consolidation. And let's say we do this, right? And this would be our third move, right? If you're analyzing the chart and your prediction is that price is going to come to this level up here, are you going to let the fact that this is the fourth wave stop you from entering a trade if your prediction is up there? So what's going to trump the other? That's the main question we're looking for. What's going to trump the other? Is it your overall market prediction or is it your fourth wave? And again, in trading, like, there's a wrong or right answer for the individual trader. For me, I can care less about Elliott Waves. I'm not an Elliott Wave counter. I think Elliott Waves, I don't want to call them dumb. I understand their purpose in the overall movement of the market as far as like Wyckoff theory and Dow theory. I understand that. But I always, and this is why I took this is why I took the course to begin with, right? Growing up, I say growing because I've been doing this so long. Growing up, I thought Elliott Waves were stupid. Yeah, I said it, okay? I said it. I thought they were complete garbage. Stupid. Didn't make any sense to me. But when I got out of my stubborn period of trading, I decided that, hey, I need to be open to different. I thought news was stupid. It's still kind of stupid, right? But I thought news was stupid. I thought everything aside from the way that I traded was stupid because I had to be locked in order to 100% believe the way I was trading. Because there were so many outside influences that I would lose confidence. So one of the reasons I decided to take that Elliott Wave course is because I wanted to learn. Same thing I learned about volume. I thought volume was stupid. And I changed my mind on that, right? 10 years later. But the reason I took that course was so I can understand them more because I shouldn't judge until we know something, right? Until we actually learn it. We shouldn't judge. That's like people that are like, oh man, those harmonic patterns are stupid, Akil. They don't work. And I'm like, did you ever test them? Well, no. I'm like, well, how do you know they don't work? I just do because they look stupid. I'm like, okay, you look stupid saying that, dummy. Like, how can you judge something that you actually haven't tested? Right? Anyway. So I learned about them and I had a better understanding of them. And I understand their purpose in the market and how they form. With that being said, did I ever have any temptations or desires to become an Elliott Wave trader? No, that part still made no sense to me. Because a wave, like think about fractals in the market, that wave 3 is just wave 1 on a higher time frame. But that wave 1 on a higher time frame is the opposite, AB equals CD on an even higher time frame, right? It's like there is no trend. You know how we talk about that all the time? There is no trend. How a pullback is a full-blown trend on a lower time frame. Yeah, so none of that stuff ever made sense to me. So I would say take that with a grain of salt unless you're going to be a pure Elliott Wave trader. So I don't think you need to be afraid of trading at wave 4. I think your better option is to make a prediction on the price chart of where you think price is likely to go and then ask yourself, is there enough room to go there? If wave 4 is 1 pip under that structure level, then you probably don't want to trade it. If wave 4 has lots of room to go higher, then you probably do want to trade it. Now, the hard part is this, and this is the separation point between the literal trend trader and the more dynamic trend trader. And we get this a lot, and this is always a discussion point in our training, but we do it for a reason. So we find this a lot where, and this is where you're coming from, Muse, where people say, I'm going to be a trend trader. And in order to be a trend trader, I need to have a confirmed trend. Does that make sense? That sounds right, correct? That makes sense, right? Now, in order to have a confirmed trend, I need that 3-point move. I need my starting point. I need my initial structure high. I need my outside return. And I need my new structure high. It looks like IVSH. No, my invalid structure high. No, it's supposed to be an N. I should do this, right? That would make it. Oh, no, I made it worse. Okay, just close your eyes, guys. Close your eyes. Don't judge me. There we go. N. Shoot. There you go. Just act like it's. Oh, now it says Nosh. Oh, I'm horrible. Anyway, that's an N, right? I don't know what I was doing. I trade. I don't write. So this is where we have our quote unquote confirmed trend. So a lot of trend traders are under this premise that where it's like, hey, I cannot enter a trend until I have that confirmed trend and a pullback from it. Does that sound about right? And there's nothing wrong with that. That is a very conservative approach. That is you waiting for a full message, as much as a message we can get in the market, of this is the safest place possible. Because I have this confirmed trend, now I can go. But what you'll often find is that, particularly in Forex, markets don't trend too often, right? 30% of the time, if that, they'll trend. So what happens is, one, you don't see a lot of these full three, especially on the higher time frames, full 3-point moves. And you get into situations where it's like, I remember I had a trader who was, they were testing on the daily, and I'll remember pound yen. They were testing on the daily, and I remember they were testing euro dollar. And euro dollar went through this like 2-year period where it just went sideways. Let me see if I can bring it up for you guys, right? So euro dollar went through this period, right? Of right here. You see this right here? I'm not even sure if this was it. This had to be it. Yeah. No, this wasn't even it. No, this was recent. Well, this is a recent 2-year period where euro dollar went sideways from January 2023 until pretty much we didn't break out of this range until like January 2025. But there was another one actually. This right here, right? And they were testing their strategy like, well, Keel, like because we were in this consolidation, I didn't have any trading opportunities for like 2 straight years because we never got a 3-point move. And I was like, yup. They're like, well, what do I do? Well, I'm like, well, it's follow your rules. If you don't trade it if you need a 3-point move. It's like, is there anything else I could do? I'm like, well, yeah, sure. There's other ways to trade. So again, this goes back to the prediction being the most important thing you can have, right? The prediction. And understanding this, right? We have, if we're making the prediction, our job is to get involved in advance of that prediction, right? So if price action is doing this, where we've trended down, we've come to a previous level of structure, maybe whatever, like that, and we start making this type of move, we know that this type of move is called what? Come on, consolidation, right? We know that consolidation leads to what? A ranging market. Sorry, I'm like ranging marker. What does consolidation lead to? You squeeze a spring, eventually it has to what? Yeah, potential energy, right? Breakout. Now, I don't know which way it's going to break out, but it's going to expand one way or the other. So let's say in this purpose, it expands to the upside. It breaks out of our high. Well, now this goes back to our original principles, where it's like, okay, I identified what here. We break and close above this level. That gives us what? A higher high, higher close, right? Or a break above, close above, right? Based on what I identify with this higher high, higher close, violation of structure, I can now predict that price is likely to go in what direction? Higher, right? So my prediction is up. Next part of my prediction is if price is likely to go higher, then where is price likely to go higher to? Well, in this very smooth example, which is very similar to the pound yen, right, that we banked on, this is our next level of structure, right? So is this a good spot to look for? Sure. Okay. So we did our I, right? We identified what happened on the chart, breakout as consolidation. We predicted our directional bias and our location. Now the next part is decide. Okay, decide. How can I get involved? Well, there's many different ways to get involved. For this example, let's use a pullback. Yeah, use Rodin retest. So a retest of structure. So a pullback into previous level of structure resistance, which we should expect or hope acts as, I don't like to use the word expect. Maybe it's me. I'm so superstitious. Like I never want to tell the market what it should do. Like I expect you to go higher. Like I would never dare tell the market that. I feel like whenever you do, the market does the opposite. So I don't want to use that word predict that price is likely to go higher, right? Well, there's the move. Now the question is, right? Do we have a valid trend in any way? Do we have an overall valid bullish trend coming from this area? No. At this point, at this circle, do we have an overall valid bullish trend here? No. What we're doing is, in this type of move, you're getting involved in advance of the potential trend. You're saying that based on the information that I've taken in, that the chart has shown me, Showed? Shown? Shown? I think. Shown me. We'll go with that. Yeah, English is my first language, guys. Based on the information that Price has, I'm too funny, guys, sorry. Based on the information that Price has shown me, my prediction is that we're likely to go higher. So what I'm trying to do is I'm trying to get involved in advance of the trend. Now, I don't have a confirmed trend. That doesn't happen till up here. But in this situation, once I do get a confirmed trend, I'm not necessarily interested in getting long because we've already come to the level that I thought we were going to come to, right? So this is quote unquote trend trading because you're trading in the direction of the trend that you anticipate to happen. But you're not waiting for that confirmed 3-point move in order to do so. Now, just to be clear, to throw one more thing in there that's going to disrupt the system, right? And I've said this time and time before, the more experience I get in trading, I don't even like using the word to trend. Like, I can care less. Like, I don't know about you guys that have been around for a while, like, I can care less about trend. I can care less about no trend. I understand why we have to say it, but you know what? You know what I care about the most? Predictions. I just want to be able to predict where price is likely to go. Because whether we're a bullish trend, a bearish trend inside of a bullish trend inside of a bearish trend, a donkey inside of a horse, like whatever it is, I don't care. Like, we can label it and call stuff whatever we want. This is the skill that I think has been most useful in my trading career. The ability to predict where price is likely to go and then being able to get involved in that move. And we can call it whatever we want. A good example, right? We did this in the trading battle, and I didn't put out the review yet, but I shared it. You guys remember this euro pound trade I took? For you guys that saw it, this was another quick money maker, right? This was the bonus round where he tried to trick us, right? You guys remember this right here? So anyway, I got short right here, lower low, lower close, right? You look at this, and we're calling this a bearish trend continuation trade, right? Would you guys say that? Pullback trade, yeah. Are we actually in a bear trend? If we look at this on a higher time frame, is there any 3-point move to the downside? Right? Not really, right? But I don't care. Like the fact was that I predicted that if we came back to this level, we would retest this level, right? We didn't continue, right? So it's not a trend following trade. We didn't continue. There was no prediction that we would continue down. It was just we would retest this level. And that's what we did before going back up. So I don't even know what you want to call this. Is it a trend trade? I don't know. I'm not really trading a trend. But it's a pullback trade, which is something you would use in trading a trend, right? So like, I don't know. This is why you see me label stuff in the chat as a pullback trade or stuff like that. Like, I don't really care. Like, I know it doesn't sound great as a teacher saying this, and this is why we do teach stuff about trend to make it more simple. There's a difference between trading and teaching and practical application and classroom work. But And I do think you need to learn those basics. Again, the advance is nothing more than mastery of the basics. I do think you need to know those things. That's important. But I don't want us to put as much power into these labels as we think we need to be. It's really similar to, I couldn't do this about a sports analogy. I had to throw in a sports analogy. Do I want to use basketball or soccer? Basketball or soccer? You choose one. NBA or soccer? Football is not going to make sense for this analogy. And when I say football, I mean the one with the pigskin. Not that other football where you actually kick a ball off your feet, which makes much more sense than why we call it football, but I'm American, so I'm going to stick by it. Oh, yes, yeah. Not real football like American football. So, basketball growing up, right? There used to be 5 positions, right? 1, 2, 3, 4, 5. There used to be the point guard, who is like the one that dribbles the ball up all the time. They're like the captain, the quarterback. They set up the play. They pass more than they shoot. They're like the extension of the coach on the field. There is the shooting guard, hence the name shoot. They're the ones that's your best shooter. They shoot. There used to be the small forward who was like a combination of, he's like a bigger shooting guard, but like not quite a big man, kind of like a middle-sized person, does a little bit of everything, a Swiss Army knife. The power forward who is like a big, they stay closer to the basket and like get rebounds and shoot. And then the center who is the really big person, your Shaquille O'Neal's, who like stay under the basket, grab all rebounds, dunk on people, right? Those are your positions, each had their role. You fast forward to nowadays, and it's really positionless basketball. You guys have heard of LeBron James? I hope so. If not, you've been doing too much back testing. LeBron James, right? So he is really a power forward / small forward, right? Because he's like 6'8", like 2, whatever. But he also is more like a point guard. Magic Johnson was the same way for you oldies out there. LeBron James likes to handle the ball. So it's like, well, your position as a small forward, you're not supposed to have the ball and do this, but like it doesn't matter. It's positionless, right? There's no more of these roles where it's like you have to do this, you have to do that. It's more fluid. It's the same way going back to soccer, where you have like a number 10 that has the freedom. So a center attacking mid, right? Who has the freedom to roam, or like let's put Harry Kane, for example. He's a good example. So Harry Kane is a striker, right? Most of your strikers stay in front of goal and just wait for the ball to come in there. Harry Kane is more like a false 9. A false 9 is like he likes to come back deep and get the ball more like a midfielder. But he has the freedom to do that. He doesn't necessarily stick to his role. So trading is fluid like that, where yes, there are certain principles that we need to understand, but we also have the kind of freedom and fluidity to look at things in different ways as long as we accomplish the task. So, yeah, that was a good session. That was a really good session, man. Hope this is recorded. Make for a good video. Now, before you head out, if you want more information like this and a lot more, we have a 1-day, 3-hour online trading workshop coming up at the end of August 28th. Register now. Seats are limited, so once they are gone, you will not be able to get in. So please don't hesitate. Please don't procrastinate. Do it right now. Now, if for some reason you're seeing this video after the date, or you just forgot to register and seats are closed, sorry, but we are trying to do more and more of these workshops throughout the year. That's one of our goals for 2025 and beyond. So just keep an eye on this space, and I'm sure you'll be notified of future workshops. All right, until next time, plan your trade, trade your plan. Remember, like button, comments, questions below, and you guys have a great weekend. I'll see you with the Trading Edge in a few days.